Good, good morning. We can hear you.
Ah, wonderful. How is everybody today?
We're good. I'm good, at least.
Hey. Well, here we are in our final session. I have no idea where the time went. Seems like I just said hello to you guys, and now we're at the end. With final exams coming up right around the corner already. So I hope you guys are preparing as you did for the first exam, with the intent of doing even better. That's always the idea. All right, let's see who is with us already. I see Andrika.
Good morning. I'm here.
Morning, Natasha.
Good morning.
Morning, good morning. Cheryl.
Good morning.
Good morning. Got it. So who's missing from our group? Davina and Jerry. Ah, there's Davina. Okay. Has anybody seen Jerry? No? Does anybody have any idea where Jerry is? No? I know somebody has to be the devil's advocate. Davina, can you hear me?
Yes, I can hear you. Sorry.
Wonderful.
I just came in the class. Which page are we on?
We haven't started yet. I was just taking the register. So you good.
Because I thought it was starting at 9:30.
Oh.
So I said let me check.
Yeah, it's a good thing you did. We're just getting started, so you're good.
Okay.
Give me 1 second, please. Good morning. May I speak with Jerry Ramming, please? Mr. Ramming. This is Mr. Wilkinson. I'm fine. Are you okay? I just thought I'd check in before I send out an APB and send the cops to see if you're okay. Okay, wonderful. Because you know today is the last session. Yeah, I figured as much. All the ladies were asking, like, where's Jerry? I'm like, I'm gonna call him and see if he's still alive and well. So yeah, when you're ready, when you're done, just jump in. Okay, take care. Good morning. Are you guys still there? Hello.
Yes, I'm here.
Okay.
Mr. Wilkinson, which ladies?
Which ladies? Let's see. Davina, Cheryl, Andrika, Natasha.
We asked. Okay.
Oh, no, I was just needling him. Not that you actually did say that. I just kind of needled him a little bit, like, which means, whatever you're doing, I know stuff's going on, but come in, join up. This is the last session. You don't want to miss anything important, kind of thing. You know, like the whoa, let's go thing. All right. I don't know why I'm so excited about the morning. I can't imagine what the hell could have happened. Okay. Any questions before we go on? All right. Of course, you can ask questions anytime. Everybody knows the question?
I think myself and Davania, the last homework assigned, we were supposed to get that from you the end of last session.
Oh, you didn't get it?
I got everything.
Okay, Andrika, you didn't get it?
No, I didn't get it. I'm sure it's in the recording, but I haven't reached that part of the recording.
Okay, so that's chapter 14.
Yes, long-term liabilities.
Great. Do you have pen and paper?
I do.
Good. I'm glad you raised it. Are you ready?
I am ready.
Number 1, page 590. E6A. E as an egg, 6, A as an apple. E6A.
Okay.
Page 590 again. E8A. E8A. Number 3, page 592. P1. 592, P1. And then finally, page 594. P4. Page 594, P4.
Okay. Thank you.
No problem at all. Perfect. All right, everybody is clear on when the final exam is next week? Place and time and date? Okay. I'm going to assume that is a yes. Let me give you the homework for today for chapter 15 while we're at it, so I don't forget at the end. Can everybody please write this homework information down? Hopefully when Jerry joins in, can somebody please remind me to give it to him? I might forget. Ready?
Yes.
Okay, page 633. Page 633. S as in Samuel. E as in egg. 6. SE6. And the final homework problem for chapter 15, page 640. Page 640. P5. That's it. All right, remember that your final exam will take the same format as the midterm, short answer questions, problems, and 1 or 2 bonus questions. Bonus questions are not mandatory. You don't have to do them. If you don't see a bonus question, don't panic. I may just not put it in, but if you do see a bonus question, I encourage you to attempt to do it to the best of your ability because it will give you extra points for any issues that you may miss in the body of the examination, okay? So try and get to them, but you spot that 1 or 2 of those questions along the way. All right, so let's get into today's blah, blah, blah. Interestingly enough, as important as this chapter is, it is not as long as a chapter we've been seeing before, like chapter 14. Okay. But it does have some very important stuff that we need to see in terms of how cash flow statements are done. Remember, cash flow statements only deal with cash transactions, nothing else. Remember, the income statement deals with income and expenses, but not everything on the income statement is a cash transaction like depreciation and amortization. They're not cash transactions. All right. So in the cash flow statement, we'll see certain adjustments being made for non-cash transactions like depreciation, amortization, gains, and losses. Okay? Since the cash flow statement cannot reflect anything other than cash. Let me say at the beginning, just for your information, that the purpose of the cash flow statement in accounting is so that anybody who's looking at the business, any business, can see how the company's money was spent, where it came from, and how it was spent. And so, for all intents and purposes, if you want to get into the nuts and bolts of how much cash is handled, the cash flow statement is a better statement than the income statement, and certainly a better statement than the balance sheet, right? Which is why some companies don't really like to expose their cash flow statements, because sometimes cash flow statements tell readers more than they need to know about how the money is being handled. And I'm sure all of you know that people are very sneaky, finicky, whatever the word is, when it comes to cash issues. If you don't believe me, go to your job and ask somebody to discuss the cash flows of the company and see what kind of response you will get. Unless you are in the circle where you're supposed to be hearing that, you will not get any information, typically. All right, just thought I'd throw that in. Since you are accounting students, it's important for you to know that. Might be helpful in your job one day, might be helpful even for you. All right, so did everybody look at Exhibit 2? I think that's where we stopped the last time. I said, take a look at Exhibit 2. Did anybody actually look at it? I'm the only one who looked at it?
Mr. Wilkinson, which
All right.
page? Which
Oh,
page?
page 605.
605?
Yeah, page 605.
Okay.
Well, why don't you take a moment and have a look if you haven't looked, and then tell me what you think that diagram represents. Like in the middle, there are three interesting connectors, and on the left and right hand side, they tell you stuff about each connector. What do you take a look and tell me what you think you see?
Well, we're seeing the inflow of cash and we're seeing the inflow of cash versus the outflow of cash, and then it's categorized between the activities in the middle.
Indeed. What are the three main activities in the middle? I like how you put that, the three in the middle. What are the three main activities in the middle?
Operating activities, investing activities, and financing activities.
Absolutely. And believe it or not, that is going to be the essence of this entire chapter and your examination question on this chapter. Those same three activities, they are key to the cash flows of any organization, small, medium, large, or mega. Doesn't matter. The principle is the same. That's the interesting thing in accounting. Accounting principles don't change.
Mm.
You're dealing with $10 or $10 trillion. The principles do not change. Unlike law, when lawyers change their mouth depending on what's going on, economists change their mouth depending on what's going on. Even doctors change their diagnosis depending on what's going on. So those kinds of things are not always predictable. But accounting, for example, is pretty much not 100% predictable, but at least 90% in terms of its structure and its interchangeability. Okay? Pretty much stays the same. If a principle in accounting changes for whatever reason from one decade to the next or several decades, it's because somebody thought they'd come up with a new, better method, and so it'll be presented as better or an alternative. But basically, the principles of debits and credits and how accounting works does not change. All right. So based on cash flow from operating activities, where does money typically come from? How do companies generate money? Cash from where?
From the sale of goods and services to customers, from receipt of interest or dividends on loans, investments, and from sale of marketable securities trading.
Absolutely. So whenever the company is selling money, selling goods and services, receiving dividends and from investments, and so on, that generates cash, and so that's the source of the cash receipts. Okay. though there are other sources as well, but these are the main categories. And wherever else a company may get money from, it'll be a source of cash inflow, money coming in. And so when this money comes in, do we just stare at it? Or what does the company typically do with this money coming in?
They invest their money.
Well, yes, but before we get to investing it, what do we do with it immediately? The day-to-day stuff, operating.
Well,
day-to-day.
to pay wages, to pay inventory,
Yeah,
expenses, interest, taxes, and to purchase marketable securities trading.
indeed. So companies have a lot of responsibilities when it comes to the money they receive. That's why, for example, when business slows down, the first people they get rid of is people, because payroll tends to be the highest expense. And so as soon as things slow down, companies stop making as much money as they used to make in terms of cash coming in. They start saying, who can we send home? Some people send home the people who just reached, other people send home the people they don't like, and other people send home people that does not add value in their opinion, and other companies send home a combination of the three. And God knows what other criteria. But you can see right away why this unfortunate thing happens. So that's the operating activity side of the cash flow. And this is what happens day after day after day. Operating means daily activity of the firm. Then we have the middle piece, which is the investing activity. Where does cash flow come from on the investing side?
From
Sale of property, plant, and equipment,
Yeah, from the sale of property, plant, and equipment. Okay.
short-term marketable securities, the sale of
Okay.
that, and long-term investments,
And
collection of loans.
the collection of loans. Uh, why is it that collection of loans is an inflow of cash? How come?
Because if we lend to any, if we are a creditor to any other company, they pay us back, that's, we make a profit on the interest we would have charged them.
Absolutely. If we are creditors, we're giving loans to other people, other companies, such as a bank, for example, financial institution of some kind. They expect that the borrower will repay the money. And of course, loans are not given free. Loans have interest attached to them, and the interest that is attached to the principal loan represents profit for the lending institution. So all that money that is collected is cash flow coming in. All right. One thing you might want to know in case you don't know already, whenever a company collects a loan payment, it is collecting two parts. It's collecting the principal part and the interest part. The principal amount of the loan payment that is collected by the financial institution represents the deposit of people who put money into the bank. So that goes back into the deposit account for people when they come in to withdraw their money. The interest part that is collected goes to the financial institution. So that represents revenue and ultimately profit for the financial institution. That's how it works, in case you're curious. All right. And so these are the investing activities. And what happens on the outflow side of the investment activity?
They purchase. Go ahead.
What do they
They
do?
use it to basically do the same thing that they spend it on, basically the same thing they got it on. So they could use it to purchase plant, property, or equipment and other long-term assets. They could also use it to purchase short-term marketable securities and other long-term investments. And then they could also use it to make loans.
Indeed. Interesting. So we receive it on the one end and we use it to do pretty much a lot of the same things on the other end. And as you can see, I'm sure you've probably figured out by now that it's a kind of cycle on the investment side. Sure, there are other receipts and outflows coming from investment, but these are the key ones. And the good thing about a diagram, it gets you to seeing things like, hey, wait a minute. The same source that we're collecting the money from is the same source that it goes out to collect money from it again, and it goes out to collect money from it again. See, and that's basically how it works. All right, and those firms who do this well enough tend to be successful, and those who don't do it so well tend to not be so successful, and some even die a horrible death. They go out of business. Okay? And of course, when we have pandemics, that's a whole different issue. So you may or may not be aware, should be aware that the cash flow of many, many small, medium, and large firms have been seriously impaired. Some firms are not feeling the pinch, like Amazon and big companies. They're having a ball, making even more money because they don't need buildings and blah, blah, blah. They just send stuff from the warehouse and online business. So they're doing well. Other companies that had business houses and locations and all that stuff and don't have the resources to ship stuff to your door, well, a lot of their investments are going down the drain, and many, many thousands of companies around the world have gone under, never to return. All right, and then the final cash flow activity is the one we refer to as financing activity. What is another name for financing, anyone? Financing, what does that mean? I think I mentioned a Bahamian word for that last time, financing.
Borrowing?
Yeah, borrowing, not borrowing. We don't say borrowing. We say borrowing. Anybody can spell that? Borrowing.
Yeah.
Yeah, I can spell borrowing. That's good. That's good. Oh, you still borrowing? Yeah. So imagine somebody coming from outside of the Bahamas area saying borrowing, they'll be wondering, what the hell is that? What language is that, Tom? So I don't know. We need to get Google that, see if we can find it. All right, so financing activity. And on the financing side, where does money come from? Where does money come from on the financing side?
It comes from the
Yeah.
preferred or common stocks and the issuance of debt.
From the issuance of common stock? Okay, that sounds like a chapter 14 thing. See, remember I told you accounting always ties in somewhere? How does money get into the company from common stock? How does that happen?
When the stocks are sold?
Yeah. Now, as you know, sold is an okay word, but we have a fancier word than sold, Natasha, when we're talking about common stock. Do you remember what it is? When the company starts with I.
Issue?
Yes, absolutely. We can use sold, but we like to use a fancy word when the company issues common stock. Okay, when a company issues or sells common stock, it collects the money and uses it for investment purposes. The reason why it's a financing activity is because when common stock is issued, the company has an obligation, although not a legal one, to pay dividends. And dividends is compensation to those common stockholders who actually purchase the stock. Okay. Same thing with preferred shareholders. When preferred shareholders purchase preferred stock, they are promised an interest rate every 6 months or every year, and the company is responsible for paying it. So basically, in both cases, they're borrowing money from common and preferred stockholders. And that is why that activity is referred to as financing. Anytime any activity that you're doing involves borrowing money from the public, you are involved in financing. It doesn't matter what word you call it, whether it's a loan, issue of common stock, or sale of preferred stock. They're all borrowing activities because you have to pay something back in return called interest. All right. Any other financing activity noted other than common stock?
Preferred.
Preferred stock. Okay. And then when that money comes in, how does that go out? What is the outflow for financing activity?
So I kind of
To
see.
repay debt
To repay debt, okay,
and to
To
pay
pay-
dividends.
and to pay dividends. Indeed, indeed. All right. So let me ask a personal question of everybody and all of us.
No, don't have.
Sorry?
You asking about preferred and common stock if we in with stocks?
You mean the personal question?
Yes.
Oh, no.
Oh, okay.
Yeah. The
I
personal
jump at the guy.
Yeah, the personal question is a cash flow question. For most of us, what is our primary form of cash inflow?
Our wages. It's our
Absolutely.
earn.
Yeah, our salaries. All right. For regular working people, our major form of cash inflow is our salary. We are extremely dependent on it. Employers know that we are, even though they need our services, they still act like God, like, don't forget I employed you. Get me mad. And then supervisors and managers know that is our main source. So a lot of them are very stinky and like to treat people like dirt just because they know you need your income and whatever we do. But yes, I just thought I'd throw that in as a sidekick because we're still doing all the stinky stuff we shouldn't be doing on these jobs, unfortunately. All right. As you can see, I'm an advocate for stop doing stinkiness on the job and treating people like dirt unnecessarily, quote unquote. All right. I've always been, actually, for decades and decades. Okay. So that is our main source of inflow. And what kind of outflow issues do regular working people have? What do we spend our money for?
Bills.
Bills like what?
Food bill, mortgage.
Light
Food
bill.
bill, light bill, mortgage bill, rent bill. That's it? Wow, that's
School
not bad.
fees,
School fees.
school fees. Several things we use the money for.
Man, my list, my list was too long then. Because
That's
I can remember back in the day, my list used to be out the door, turn the page, all kind of stuff like that.
Mm-hmm.
So if you guys have a short list, that's good.
No, we don't. No.
I know. I'm just teasing. Hopefully at the end of the day, when you look at your outflows and measure it against your inflows, some of us are fortunate enough to have a surplus of like money left over to save,
Mhm.
even a couple dollars to save. Others of us, sometimes our outflows are greater than our inflows every year. And so
Yeah.
we're always spending more than we earn, which means you have to find ways to make up the shortfall, and it's always a challenge. You may want to know that companies have the same problem. That's why they oftentimes have an overdraft facility. Anybody knows what that is? Overdraft? Yeah. Do the
Yeah.
banks give personal overdraft still?
Yes.
Okay, that's good. So those of you who continue to have like little shortfalls, you should maybe go to the bank and say, can I have like a $3,000 overdraft? So that when I have a shortfall in any given month, I can pay the bill.
You have to pay interest on that when you take out the draft facility.
Yeah, nothing is free. Like if somebody comes up to you tomorrow and say, this is free, is it really free?
My mantra is always nothing in life is free,
That's
even when it appears to be.
that's pretty much the truth. Okay. So if you don't pay now, you'll pay when?
Later.
In one form or?
The
Another.
other,
Yes. Does anybody in this class know the Bahamian word for another?
No.
Where did you guys from? You
Mm.
guys know grandmothers, huh? Like old grandmothers. My.
It just depends on what island you're from. Like
I know,
dialect.
but that's true. But generally, the word is the same. A lot of them, like the Bahamian word for another.
Maybe when you say it, you'll know.
When you hear it again, because we don't say it too much. That's the other thing. Cheryl, do you know the
No,
Bahamian word for
another.
another?
other.
Another.
Another is other.
No, the Bahamian word for it.
I don't.
The Bahamian word for another,
Yes,
other.
that's one. Yeah, that's a good version. That's one.
That's
Other,
not another.
other. Yeah.
That's the only other word I ever heard.
You never. So you guys never heard about another?
No.
Oh yeah, another. Yes,
Man,
I've heard.
give me another one.
Oh,
Oh yeah.
now that you said it,
I don't-
I think I heard that. I think I heard
We're
that in
not
the school
thinking that
before.
far.
Sorry.
Parents trying to teach the kids proper English.
Yeah, I know. But guess what? In Jamaica, they teach them proper English too, but they still teach them the part 12.
Yeah. That's the
So
difference.
if you go in Jamaica, you will hear very educated Jamaicans speaking very good English until somebody piss them off. Then what happens?
Patois time.
Uh-huh.
You want to understand what they're saying.
Yeah, you understand a word. And then when they cool off, then they go back to normal, standard English. So we have deprived our children of their heritage.
Yeah, because there was a debate online the other day, and a lot of people don't know what flower pop is.
No, imagine that. Thank you, Andrika. A lot of young Bahamians don't even know what flower pop is.
Ugh, it's
Sick.
disgusting.
Yuck.
Actually, and people actually used to eat that. Wow.
Yes,
I tried that before. That's long time. That's
and
disgusting.
that's only disgusting because you're used to eating well.
Yeah,
But
that's
if
the
you-
There's
disgusting.
nothing else to eat, I guess.
You have never been hungry before.
Well,
If you
my mom used to give it to my kids when they were babies, and I tried
Wow.
it,
that's
and it was
yeah,
it was
that's
it's disgusting.
yeah. But let me
That's
tell you
just
The
something.
taste.
fatten the churn up.
Let me
That's
tell you.
actual taste.
Let me tell you. Let me tell you in a spoiled Bahamian something. If you're hungry enough, you'll eat a roach and a rat. Did you know that?
I would starve.
No, you wouldn't. Hungry bellies can say any
At this
foolishness.
point in time, yes, because we know what we've been eating. So what happened? We will starve, some of us. Believe you
Okay.
me.
And that would be foolish to have food in front of you and starve to death just because
Not if you don't
cleaned up.
consider it food.
Well, if it's flower pop, I'm not gonna eat it.
Do you guys know that people in the Eastern world eat anything that moves and sometimes while it's moving?
Not in the Eastern world, right? Our next door neighbor in Cuba, because one of my Cuban coworkers, she was sharing some of the foods that they had to eat when the country was in turmoil a few years ago. People were eating anything off the roads, anything that moved. And I'm like, well, I would have starved. Well, she
Thank
said,
you.
when you're really
Thank you,
hungry,
Davina.
you have no
Davina,
choice.
you wouldn't starve. You're only saying that because your stomach is still full. You could still go down to doggone
Listen,
back.
if you had a thing she called off, no
Oh,
cat, who
let
eating cat? I'm
let
not
me
eating
tell,
the
You
people
want
was
to see cat
Is it
the
now?
people
dog?
was eating the cats.
let me
People
tell
eat
you,
dog. What
let
makes
me
it?
tell, let me tell you,
I eat
Bahamian,
the dog before I eat the cat. I'm not eating no cat.
Mhm.
lot of you guys,
I believe.
a lot of you guys have
Mm-hmm.
eaten cat and dog right in Nassau when you go to buy Kingdom something.
Mm-hmm.
You don't know what you're eating?
Alleged. Alleged.
Oh, alleged. Okay.
Yes,
Alleged.
That's what you don't know. It don't kill you.
that's right.
I know.
I've eaten cow heart before and I didn't know. They told me afterwards and I got a napkin and I spit it out and I didn't eat any more of it.
Was it good? I say, wait.
No, actually, when I was asked what the hell is this, and then that's when they told me, and I spit it out because I wasn't enjoying it. It was awful. It's a delicacy in Peru, and that's what they eat. Like how
Yeah.
we eat sheep tongue and all that, and conch, that's their delicacy. No, thank you.
Do
Mm-mm.
That's
you
how they
eat,
consider probably sheep tongue.
Davina, do you eat sheep tongue?
No, I don't eat any of. I don't eat any of those stuff.
Why
Nope, sheep
not?
tongue. I don't like it.
How come?
It don't taste good. I don't care. Even when my mom makes it, I look at it and I smell. Even boiled fish, I don't eat. I'm very picky with food. That's why I told you I would starve. I'm very particular. The
What kind of
certain
Bahamian
taste
you is?
and
What kind of Bahamian you is, doggone Davina? You sure you
it's
were born
awful.
here?
And you look at the pig feet and it's a turn off for me, and the sheep tongue and all that is a turn off.
Okay.
Even conch, I just
Okay.
recently
Let me
started
ask you
eating.
another Bahamian question. How you
Mhm.
get so?
How I get so?
Yes.
What do you mean? How I get so?
Well,
It's
most
the
Bahamians
it's a
you find
personal
that very
preference
odd.
of mine. I'm allowed to have, you know.
No,
I
no,
eat other Bahamian meals. It's just that I'm not gonna eat. I'm not gonna eat boiled fish, sheep tongue, or what's the other one? Pig feet. It's
yeah.
disgusting.
Do you know why you don't eat them?
I just don't like. My boss told me I have a texture problem. Because I wouldn't even eat salmon. I don't like slushy, slimy things, I guess. Like certain
Okay,
seafoods, I'm not gonna eat oysters and all these different things. And they
okay,
asked me if I'm a Bahamian. I said yes. I just don't eat it. Like
okay.
Scotch conch, I can't eat Scotch conch. I won't eat it.
So
So
you
you
don't
don't
eat
eat conch
anything
salad
Bahamian.
either?
Yeah,
That's
I eat the
crazy.
conch if it's fried and if it's in a salad, but it have to have plenty pepper. I'm very particular.
Okay,
Yeah,
okay,
that's another
interesting.
story.
Yeah, interesting. That's really cool, Davina. No,
Yeah.
we all have our own preferences. Nothing wrong with that. It's just interesting. Okay, because I'm sure all of us have some things we definitely don't eat, for sure.
Mm,
Okay, so
yeah.
absolutely right. So it's fascinating when we start looking at inflows, inflows and outflows, um, even in regular stuff. We come up with all kinds of things and various variables and so on. And I just kind of threw that out also because, as you can see, even in the discussion of cash flows, there are so many things going on in different categories. A lot of moving parts are affected by inflows and outflows, the timing of it, when it comes in, the amount, the circumstances, the economy, all kinds of things are going on which are impacting this whole thing. And so I guess like in our own day to day, a lot of things happen as a result of a lot of other things that are either happening or not happening. It's kind of like that. So yeah, we study these concepts, but in the real world, like everything else, we have to understand that they're subject to all kinds of variables. Okay?
Mhm.
All those persons who have died from COVID in the Bahamas in the last 6 months, they never thought that that would have been the way they would have died. We never even imagined COVID anything. Only a few Bahamians never even died from the flu before this. We
Mhm.
got the flu, we went home, drink liquid, stay home for a week, and go back and say, man, that flu really treated you dead, man. But I feel better now. And now we have scores and scores, hundreds of Bahamians in 6 to 12 months who didn't even last 5 minutes because of the circumstances, kind of like that. And imagine they were all busy planning cash flow issues too. And I get my payment, I get my bonus. I'm going to do this next year. I'm going to do that in 5 years when I retire. I'm going to do that. I'm so happy to get getting with these children in a couple of years. All kinds of stuff.
Something.
Never to be. My. So yeah, everything is relative, even in the context of the discussion that we're looking at now. The jobs where you're working, your people, there are people in your organization who are constantly worrying about cash flow issues. Maybe not you, because you have a specific task, you go and do it, say, I'm so tired working here all day, and you go home and sleep. But there are other people whose job is to look at these issues in an effort to make the company more prosperous, continue its life, and keeping it profitable and able to pay its bills. Okay? And
Mhm.
that's why we go through this kind of chapter at all. Very crucial. All right. So I really tormented Davina the last time, so I think we're going to go back to the top and start with Natasha today. Natasha, are you there?
I'm here.
Great. Why don't you pick up page 605 with required disclosure of non-cash investing, etc.
Required disclosure of non-cash investing and financing transactions. Companies occasionally engage in significant non-cash investing and financing transactions. These transactions involve only long-term assets, long-term liabilities, or stockholders' equity. For instance, a company might exchange a long-term asset for a long-term liability, settle a debt by issuing capital stock, or take out a long-term mortgage to purchase real estate. Although non-cash transactions represent significant investing and financing activities, they are not reflected in the body of the statement of cash flows because they do not affect current cash inflows or outflows. They will, however, affect future cash flows. For this reason, they must be disclosed in a separate schedule, usually following the statement of cash flows.
Now, before Natasha on. Let me say this. Please don't discount that paragraph. They put it there for a reason. There are non-cash transactions that occur that are crucial to the organization in the gazillions of dollars sometimes. But because they don't involve cash immediately, they are not shown in the cash flow statement. Okay, that is a serious point to be made. The reason why I say that, oftentimes when students, they miss that point, when it's time to do the homework or an examination, and a non-cash transaction comes up, they don't remember that, or they never read that, or they didn't understand it and didn't ask a question about it. That these non-cash transactions do not show up in the cash flow statement. Some actually try to put it in and make up a number and all this stuff. You cannot do that. Okay. The one thing you don't want to do in accounting is make up a number, unless you're trying to estimate the value of a particular asset or such thing. In accounting, we very seldom make up numbers. Numbers have to come from somewhere. So if you put a number down, you better know where it came from in accounting. If you don't balance and you cook the books and make it balance, and then the auditor says, where did that come from? You need to be able to say where it came from, or else. But folks keep trying anyway. Notice non-cash transactions do not show up in the cash flow statement, but they do show up as a what? Anyone? As a disclosure statement. What is a disclosure statement?
To the audit note,
Yeah, a note.
financial note.
So in the cash flow statement, non-cash transactions are not in the body of the statement, but they're shown underneath or as an attachment to the cash flow statement. That in last year, the following non-cash transactions took place. We exchanged real estate for common stock. The estimated value or the agreed value was, okay? So there's no exchange of money, but they have to make a note on the statement that that transaction occurred. And the reason for that is, as we're told, there will be future cash flow implications, and people reading the statements today need to know that that happened, so they can look forward to the results of that transaction, even though there was no cash involved. All right, keep going, Natasha.
Alternate presentations of operating activities. There are two ways of presenting operating activities on the statement of cash flows. The direct method converts each item on the income statement from the accrual basis to the cash basis. The operating activity section of the statement of cash flows under the direct method follows in simplified format.
Now look at page 606. It's a very simple version of the direct method. You do want to look at it because it differs from the indirect method, and you'll see very soon which method we use, which is most popular and why. So notice the direct method for the cash flow from operating activities, the first part of the cash flow statement, shows cash receipts from sales and interest, very direct. So whatever sales you make, you put it down, whatever interest you receive, you put it down, that's it. And then as a subtraction from those inflows, we have cash going out for purchases of inventory, no doubt, or equipment, other operating expenses, interest payments to bondholders and whomever, and income taxes to the government. So it's a very clear approach to how cash comes in, how cash goes out. Very simple, very uncomplicated. You would think that any company would be interested in using the direct method. On the other hand, there's the indirect method. The indirect method has its own set of characteristics. Okay? Notice the indirect method does not require conversions from accrual to cash. They have a whole different format that we use. And if you look at that format, you'll see how the indirect method differs from the direct method immediately. Okay? For example, the indirect method begins with net income. It doesn't begin with cash receipt from sales and interest. It begins with net income, the bottom of the income statement. So immediately it's very different in its approach. Okay? And then the indirect method shows the adjustments to that net income in very specific, and this is what we're going to spend the rest of the next few pages looking at, how we use this method in order to convert accruals to cash. I know that doesn't make a lot of sense yet, perhaps, but hopefully it will soon. Okay. So you can see the kinds of adjustments that are made on the indirect method, adjustments for the depreciation, adjustments for gains and losses, and we'll see how they impact the operating activity and why we actually use this particular statement at all. You should see right away that the direct method is a simpler method, at least it appears that way, and the indirect method seems to be a little more complex in its appearance. But let's keep going to see if there's any truth to what it looks like. Keep going, Natasha.
The direct and indirect methods always produce the same amount of cash flows from operating activities. The direct method presentation of operating cash flows is more straightforward than that of the indirect method, but it is more difficult to implement in practice. Few accounting systems provide the data easily to make the calculations necessary for the direct method. Further, when the direct method is presented, preparation and disclosure of the indirect method of presenting cash flows from operating activities is also required. Analysts prefer the indirect method to the direct method because it begins with net income and derives cash flows from operations. Analysts can readily identify the factors that cause cash flows from operations to differ from net income. Companies prefer the indirect method because it is easier and less expensive to prepare. As a result, the indirect method is the overwhelming choice of most companies and accountants. A survey of large companies shows that 98% use this method.
Interesting. So all of a sudden, the format that seems the easiest or the easier turns out to be the more complicated one for two reasons. When you use the direct method, getting the data for the first part seems simple enough in the exhibit, but of course, in addition to that, you still have to come up with the indirect items as well. So it's a two-step process, which makes it more complex than the second indirect method, which uses a one-step process. Once you're done reconciling net income to cash flow, then you're done. If you use the direct method, you have to come up with the cash flow, and then you have to still reconcile the accrual items, which explains why companies go with the indirect method. It's easier and cheaper. Less work, less time, less money. That's the whole idea. All right. So now we get to the steps in determining cash flows, first from operating activities. And I say first because we know there are 3 steps. We're not done with the cash flow statement until we've done all 3 steps. And so we begin with the first step. And then we look at the other ones individually. We know the first one is cash flows from operating activities, cash flows from investing activities, cash flows from financing activities. And then once we come up with that information and analyze all that information, then we prepare our cash flow statement. And I'm walking it this way because it's the same approach you need to take for your homework. I'm sure the homework question is going to be very similar to what we're discussing. That's the whole idea. So when you get around to doing it, that you'll remember that it's a step-by-step process, and you will make your life easier for homework and even examination purposes if you follow the step-by-step procedure. I noticed for the homework for bonds, some people followed the step-by-step procedure and did very well in their answers. And that's the whole idea. If you follow the rules, it's hard to go wrong. And hopefully some of that stuff will stick in your head come next week. My thing is just, in addition to reviewing the main points in your chapter for each chapter you're studying, please just redo homework and pick 1 or 2 new questions of your own and just complete them. It's a little time consuming and painstaking, but hey, no pain, no gain. I know it's an old cliche, but it's still true. All right, keep going, Natasha, to demonstrate. Page 607.
To demonstrate the preparation of the statement of cash flows, we will use data from Eureka Corporation. Eureka's income statement for 2014 is presented in Exhibit 4, and its balance sheets for December 31st, 2014 and 2013 appear in Exhibit 5. Exhibit 5 also shows the balance sheet accounts that we use for analysis and whether the change in each account is an increase or a decrease.
All right, now, please, these two statements will be the statements that we use throughout this analysis. So if you need to put your finger ruler mindset, don't forget those statements are there, because everything we'll be discussing will be in connection with these statements. And so I think you should have gathered by now that in coming up with the assessment of operating activities for the cash flow statement, we must have two types of statements. Number one, the income statement, which is here in exhibit, what is that, 4? And then the comparative balance sheet, not just the balance sheet, a comparative balance sheet showing 2 years, as is shown in exhibit 5. I think that is. Yes. So you must have those two types of information if you're going to complete the cash flow statement successfully. Okay. I hope I don't need to explain the components of this income statement. I would like to think that all of us are more than familiar with this kind of income statement. Or you can look at it, and if there's something on the income statement that you don't really get, you can ask now before we go on, so that when income statement issues come up in the cash flow discussion, you won't be stuck on what the. Is there anything on this income statement that looks weird, like you don't know, never saw, looks funny? Or everything looks familiar?
Looks familiar.
Sales minus cost of goods sold equals gross profits minus expenses minus taxes equals net income. Okay, cool. That's good. I love it when you're stuck, but I love it when you're unstuck as well. All right, what's the net income for this company?
16,000.
16,000.
What's the gross margin for this company?
178,000.
Does anybody know the other name for gross margin? It's gross something else.
Gross
Gross profit.
Gross profit. Notice the gross profit for this company is how much?
178,000.
The net income is only how much?
16,000.
What happened to the rest of the money?
Pay bills.
Expenses.
Yeah, yeah, pay bills. All right. So if you open up a business one day and you start making money, don't start taking money out of the company, but you're going away again because you like Miami or Fort Lauderdale or Las Vegas or wherever you want to go. Make sure you have enough money to cover the trip that is not the company's money that it needs to pay its bills. Because a lot of business people, once they start making money, they start taking stuff at the register, writing checks on the account, as if they've forgotten that they have other bills to pay for the company. So for all intents and purposes, for this company, if you own it, you can't be doing any crap until you find out what your net profit is, which is 16,000. So you shouldn't technically take out more than 16,000, correct? Because you need all the other money to do what?
Pay bills.
Yeah, pay bills. You could take it. I shouldn't say you can't take it. I should say you shouldn't take it. You could do anything you feel like. It's your company. But just know when you start having cash flow issues, it's your problem too. The only problem is when people have problems, they always bring their problems. Not when people are making money, they don't bother anyone. Hey, my money. When people are not making money, companies or whatever it is, then they make everybody miserable. Like, Okay, future business people. I'm just kind of throwing that side of it out in case some of you become business owners one day. You might remember, what the hell was that Mr. Wilkinson told me again about me and my money and my business? So when you go to grab several thousand, I said, wait a minute. He said, a few years ago, he said I shouldn't just grab it out. I should consult my accountant to see how much I'm allowed to take out without hurting my company. I'm not consulting any accountant. It's my money. I'll do whatever I want. All right. So what's in Exhibit 5? What is that?
Comparative balance sheet.
Yeah, it's a comparative comparative balance sheet, which years are being compared?
2014, 2013.
Okay. So notice how this balance sheet is structured. If you just look at it for the first time, it looks very complicated, but it's not. It's the same balance sheet you've always been looking at from accounting 1 and 2. Interestingly enough. Don't try to complicate it because we add another year to it. For comparative purposes, it's the same thing. Notice the balance sheet has 2 years and the third column is called what?
Change,
The change that has occurred in the fourth column?
increase.
Increase or decrease?
Yeah. So I'm just saying, so even when it's time to study, don't be like, man, I can't remember all of that. There's nothing to remember. It's very simple. The only reason you may not remember is because you don't want to be bothered with it, because in your mind it already looked funny. But if you, once you look at it, you find, oh, 4 columns, 1 year, 2 year, change and increase. Even Mr. Wilkinson can remember that he's not a young guy. See my point? It's not that complicated. All right. So once you understand that, then this big old colunky, it's not a Bahamian word, balance sheet doesn't look so formidable anymore. For example, the first current asset in this balance sheet is what?
Cash.
Cash.
Cash. Is that typical for a balance sheet?
Yep.
Okey-dokey. It's nice to hear people answer with confidence. Yep. Because the cash is the first item we always see on any balance sheet anywhere in the world in any language. Well, maybe. I don't know where the Chinese put cash. Maybe to the bottom to hide it. I don't know. We'll have to see it. Has anybody ever seen a Chinese balance sheet?
No.
No.
They don't let you see the book.
They don't let you see anything. And when I tell certain Bahamians that Chinese are sneaky, they look like they're mad at me for saying it. Like, why is it that we get mad at people when we say Chinese do stuff? How come? Because they own Bahamas, is that it?
I don't know any Bahamian that gets mad at me for saying anything about Chinese. They'll probably agree. They'd be like, "You right, them Chinese."
Thank you, Andrika. That's exactly what I was hoping somebody would say. All right, absolutely. All right, so you young Bahamians who will be future politicians and making decisions for the country, make sure you know who you're dealing with. Otherwise, like it has happened in the past many times, you're going to get
Screwed.
Thank you very much. So, my. I say you young Bahamians because you're the guys of the future. And some of you are going to be some things you can't even see yet. You can be the minister of something even. What's the female for minister? Is it ministress? Like the
I've
ministress-
never heard that term, but it should be.
It should be the ministress of education.
Yeah, but I've never heard ministress.
You're all ministers. It's a gender neutral term in politics.
It's a gender what?
Gender neutral.
Who came up with gender neutral in the first place? Does anybody
I
know?
don't know. It's so
In
confusing.
politics, they're all ministers. I've never heard another term used for them.
No, I agree, Cheryl, you're right. But do you know that God came up with gender neutral? Like he said in the beginning, there's mankind.
Yeah,
He never said womankind.
that's right. He did. That's the human race is mankind.
Yes,
But male and female created he them.
I'm saying, but he never said womankind. Mankind meant man and woman
Mhm.
equally.
That's referring to
But then
the
they also
human
say when
race.
he take
That's referring to.
Don't take. I take that to mean the human race when you say mankind. When you refer to mankind, he just
Yeah.
referring to the human race.
As
He's not
opposed to
calling
what?
male and female man.
right.
Yes, he's calling male and female man.
No, because he said he got take the rib out of Adam
And
and
he
gave
did.
it a woman. So that's to distinguish
And he differentiate.
there.
Folks, it's not a personal thing. He said mankind means male and female.
Referring to the human race. The
The
human race is mankind. The human race will always be
do we still
mankind.
have a human race?
Yes,
So we still have mankind.
but that consists of male and female.
That's what I said.
Let's,
So when we say man shall live, not live by bread alone, does he mean only male?
no, I mean
Yeah.
the human race.
No,
Mankind.
does he mean only male?
No, male
No.
and female.
He mean
Okay.
everyone,
No,
everyone.
no, it can't be everyone. There are only two types of people on earth. When he says mankind or male, then does he mean only men?
No,
No.
male and female. In certain aspect, he refers to male and female as mankind. Yes, we got that.
Okay. I'm just being the devil's advocate.
I know
But
you are.
remember, we're changing
I know you know
everything.
better than that.
You know that now in the United States, they're not referring to boys and girls as boys and girls anymore.
Honey.
Yeah, they went. Yeah, it's not true.
It, what it is? She was some, it.
I'm just saying, because
Yeah,
you
it's
guys
not-
are,
No, it's
you
her.
guys are the
her,
ones who are gonna have to
something.
deal with it.
It's too
Don't,
confusing.
okay? I'm just saying for information, you guys are gonna be the ones who are gonna have to deal with it in one form or another. Because remember, whatever happens in the US happens where?
Here,
Eventually. Okay. And then whatever you don't accept, they make you do it. Or they
yes,
will
I'll be cut
stop.
off.
Yeah, you'll be cut off.
because we are so independent, dependent of them.
Well, whatever our reasons, but the Bible didn't say anything about whether you're dependent or not. Right is right, wrong is wrong, whether you're dependent or
Don't
not.
bow. That's what
That's
it
my
is.
Well,
point.
if you don't bow, you lose out.
You just
Well-
lose out on gain God. How about that?
Well, yeah, lose out.
It
That's
affects
what,
you though.
that's what
There's
the
a price to
Bible
pay for
says.
everything.
Yes, lose out and gain for God. That's it. See how simple that is?
Okay. You see, we just get downgraded, right? So how is that affecting us?
Whatever it is has nothing to do with what's right and what's
I'm
wrong.
wrong.
See,
That never
we keep worrying
changes.
about the effect on us. Fine, we get the effect, but it does not, the effect is some other issue. Right and wrong is right and wrong, period. Now, how you deal with the effects of it in relation to right and wrong is your own individual decision. But just know that's my position. You may not agree with that, and that's okay. And make no apologies. I'm just throwing it out. Somebody has to be the devil's advocate in these matters. So now boys and girls are no longer boys and girls. Little children are being told that you can be a boy or girl, just say the word. And your parents will not be able to do anything about it.
No.
You're not happy with the genitals you were born with? Change it. And call yourself anything you feel like. That
Yeah.
is a recipe for disaster. We still having problems with the creation God made. And we're trying to add new stuff to it? Okay. I wonder what that has to do with the accounting. Is that a debit or credit? Depends on what side of the ledger you're on. My. All right, so the change in cash is how much?
32,000.
32. How do we know that that's the change? How did that come up?
Let's do subtract 47 from the 15.
Suppose the 47 was in 2013 and the 15 was in 2014. Would it be the same thing? Would it still be an increase?
If the 47 was 2013, it would have been a decrease.
Yes. Does everybody get that?
Yes.
In
Yeah.
other words, what I'm saying is the positioning is important. You see that?
Right. So if it's
Okay.
in brackets, it's a decrease. Decrease. Yeah.
Yeah. Anything in brackets for accounting purposes is a decrease. Okay? Anything in brackets for accounting purposes is a decrease. And for our purposes, it's a decrease. Okay? What about accounts receivable? Increase or decrease?
Decrease.
Is it a decrease because the book said so, or how do you know otherwise?
Because
Calculation.
2013 it's more, 55,000 and it decreased. by 8,000 in 2014.
Okie dokie. Inventory,
Inventory is an increase.
increase. Why isn't inventory in brackets?
Because it's an increase.
Exactly. Isn't the obvious crazy sometimes?
You're looking for a trick answer.
Yes, sometimes we can't see for.
Okay.
What about prepaid expenses? Increase or decrease?
Decrease.
What is the prepaid expense?
Payment made in advance.
Yeah, payment made in advance. When you go to pay your car insurance every year in January, for example, is that a
For a year.
prepayment?
Oh,
Is that a prepayment?
Yeah,
yeah, that's, yeah.
Yeah, because you're paying in advance for the whole.
yeah.
Yeah. Why don't insurance companies allow us to pay month by month? Like, why do they have to get all the money up front, even though they're not providing the service over the whole year? Why do we have to pay all up front?
Trying to secure their payment.
Oh, that's what they're doing?
That's what I say.
Oh,
It appears.
I know. And some other, at least you have a reason, Cheryl. Some other people, because it's always been that way.
Yeah.
But remember, when they get all your money up front, they're investing it the whole year, right?
Right.
But you don't have possession of your money to invest for the year.
No,
So who benefits from that?
the insurance company.
So you stop paying all these bills in advance, especially at home insurance. Just dump
Ah.
smart.
Especially home insurance. That's why insurance companies are so rich, because they use our money to
Why in
invest.
the world you pay all one time?
Hmm.
Pay half the year.
What we need, let me say, Andrika will be the ministress of finance. Look at ministress. Everybody can be
Sounds
tongue
good.
tied. Okay, the ministress of finance. And so one of these days, she's going to say the insurance company is the ministress. Heretofore, we're going to pass a law that people will be allowed to pay their insurance premiums on a monthly basis to cover just for that month. So every month you pay in advance for the month coming. The rest of the year, you get to keep your money and invest it, make a couple dollars from it for the period that you don't have to make a premium payment. And then what's going to happen? Then the insurance companies will start lobbying and force the ministers to not pass the law, because that's
Yeah,
going to get into their
I mean,
money.
I won't want to do that. That's too much transactions to make, too much monthly bills to pay.
Well, they're hoping you feel that way because they're making
I
money.
prefer to do it biannually.
Yeah, well, whatever it is, they're making money because you don't want to be bothered with the monthly thing. But most of us still have to pay monthly anyway because we don't have the money to pay all up front. We have to finance anyway, don't we? So we're back to part of it being monthly and part of it being paid in full. So those people who have a bunch of money, they say, I'm paying my thing in full. I can't afford to be financing. And other people say, I can't afford to pay in full. Thank God for financing. For some of us, if it wasn't financing premium, we wouldn't be covered. Because we just can't find those thousands to pay those insurance companies that they're already overcharging us for anyway. And premiums. How come nobody stops them, Cheryl? Like, you're charging people too much.
I don't know.
Okay. Okay, the ministers
Hold up a lot.
don't worry about it, Cheryl. The ministers of finance, Andrika, will deal with that in the years to come. How's that?
Sounds good.
So we will benefit.
That's okay. But our
Other
children,
show.
but our children,
That's what
and our-
others.
yeah, our children and our grandchildren will benefit. That's what it's all
For
about.
the others.
Yeah, absolutely. Man, the life I gave my children, if they knew what their father's life was like, they'd start crying for me all over again. Because they have no idea. So the idea is to do what? Improve upon? Yes, that's the idea. But you still have to tell the children, but them and neither. So for the record. All right, so now you can go down this whole balance sheet and do what I just did. See what the increase and decreases are, and then we'll soon find out why we do that. All right, Natasha, keep going. The income.
The income statement indicates how successful a company has been in earning an income from its operating activities. However, because that statement is prepared on an accrual basis, it does not reflect the inflow and outflow of cash related to operating activities. Revenues are recorded even though the company may not yet have received the cash, and expenses are recorded even though the company may not yet have expended the cash. Thus, to ascertain cash flows from operations in step 1, in preparing the statement of cash flows, the figures on the income statement must be converted from an accrual basis to a cash basis. As Exhibit 6 shows, the indirect method focuses on adjusting items on the income statement to reconcile net income to net cash flows from operating activities. These items include the following: depreciation, amortization, and depletion, gains and losses, changes in the balances of current asset and current liability accounts.
All right, another one, that 6 shows you that process. Just a picture of what we'll be talking about in a minute or two. Okay, and so thank you, Natasha, for taking us to this point. And so now, having said all of that, we have a sample statement of cash flow called the schedule in Exhibit 7, which gives us a snapshot of what a cash flow statement would look like. And then we're going to look at how we arrived at those numbers in Exhibit 7. So put your ruler finger, whatever marker there, because quite a few things we'll be referring to the schedule and Exhibit 7. All right, let's take a moment to look at the schedule, beginning with net income. Notice, well, maybe what I should do is say a few things before we go on, and maybe the explanations that are given may be a little easier sooner for some persons. All right, so let's look at the sample cash flow statement. What does it open with?
Cash flows from operating activities, net income,
Which is,
16,000.
which came from where? I told you don't lose track of the previous stuff.
The income statement for 2014.
Yeah, the income statement for 2014, which we saw on page
607.
Okey-dokey. All right, which method are we using?
This is
This is like
the
the
indirect.
Indirect method.
Somebody said in the question form, somebody said in the statement form. Which one is it again?
Indirect.
Yeah, the indirect method. How do you know?
You could see it right there.
It says, that's what I'm talking about. If it didn't say it, how would you know?
It has adjustments.
It also starts with net income.
That's the key. If you see a cash flow statement that starts with net income, you know you're dealing with the indirect method, whether it's said so or not. All right, way to go. All right, so since we're dealing with the indirect method, we now have to make some adjustments, as we were told in the previous readings. What is the first adjustment we need to make? Which item in Exhibit 7?
Net income to net cash.
Not yet. We're looking at the adjustments to reconcile income to net cash.
Okay, depreciation.
Depreciation. Now, that depreciation of $37,000, where did that come from?
From the income statement of 2014, operating expenses, it has in the brackets.
That same one. Now, that 37,000 depreciation came from income statement as a deduction, was in bracket, right?
That's a
It's not
decrease.
in brackets here. Why? Anybody figured it out yet? Like why it's not in brackets? Here we're adding it. You'll see why a little later too. I'm just wanting to introduce you to the concept so that when you see it, hopefully it'll be clearer. Why are we adding depreciation back to net income? Primarily because when we subtracted depreciation in the income statement,
Mhm.
it was an expense, but it did not involve any what?
Cash.
Cash. And since it did not involve any cash, for the cash flow statement, we have to increase net income by that amount because in the income statement, we decreased the income statement by the amount, even though there was no cash. So we have to add it back to net income so that net income can be properly reflected from a cash flow position. In other words, if we add 37 to 16, what would that give us?
42.
42, which means that in the income statement, when that was deducted, there was no cash involved. That's just a depreciation expense that is allocated from the asset depreciation. But for the cash flow statement, we have to add it back because if we don't add it back, then the cash flow would be what? Understated, wouldn't it? Does everybody see that? Yeah,
Yes.
absolutely. So for depreciation, depletion, and amortization, any one of those have to be added back to net income. So net income can actually reflect the correct cash position. Typically in an income statement, depreciation, quote unquote, would not be subtracted normally because there's no cash involved. But because of accounting principles, we have to reduce the income earned from the company for depreciation allocations, and therefore we subtract it on the income statement only. But when it comes to cash flow, we have to put it back so that the net income reflects the correct balance, which is in this case 47,000. If you don't get it yet, hopefully it'll kick in, like the bulb will go off eventually. All right, what's the other item?
Gain on sale of investments,
Gains added or subtracted?
subtracted.
Subtracted, okay. Next item,
Loss on sale of plant assets,
loss on the sale of plant assets. Increase or decrease?
increase.
Is that on the balance sheet, comparative balance sheet?
Loss on sale of plants.
Or is that on the income statement anywhere?
The income statement,
It's on the income statement?
yes.
Yes.
Is the gain on the income statement?
No,
Only the loss.
yes.
Interesting. Okay. So like depreciation, what happens to losses? Do we add it or subtract it to net income?
Looks like we're adding it.
We are adding it. And how do we know that we're adding for sure?
There's no parentheses.
There is no parentheses, no brackets. So if you don't see any brackets, you don't have to guess or worry. It's added. If you see brackets, you don't have to guess or worry. It's subtracted. Is that good? So when exam time comes and homework, don't spend time trying to figure out where you should add or subtract. Just follow the rule. All right. Are we done with the items on the statement of cash flows?
No.
No, what is next?
And decrease in accounts receivable,
Okay, what's the heading for that?
changes in current assets and current liabilities,
What was the heading for the first part?
cash flows from operating activities.
That was the heading?
The heading, the corporations mean that schedule
The heading
Cash
just
flow?
on the net, the heading
Close.
just on the net income.
adjustments to reconcile net income to net cash.
Yes. And then what do we say after that?
Flows
The
from
cash
operating
flows
activity.
from operating
activities.
activities. Then we went into it. You follow? The reason why I'm directing you to those headings, because those headings are important. Not only just understanding the concept, but just knowing that where they're located and why, okay? So the first part of this cash flow assessment is the operating side. Now we're into what side? Assessing changes in current liabilities and current assets.
It's
What's the first
balance
change?
sheet,
Yeah, balance sheet items. What were the items before the balance sheet items?
income statement.
Absolutely, very important difference. Okay, that's really why I'm trudging you through it the way I am. Because most times when this topic is discussed, studied, lecturers tend to just walk through it and then you're on your own. I know, because a million years ago I had such a lecturer and it was a very frustrating experience because now I had to go home and figure out the whole thing on my own. Or call somebody who may have known.
Yeah,
Or
now that
yeah. And there was no Google then, so you couldn't Google anything. If you wanted anything more, you had to walk to the library or drive there. My. Okay, so now we're looking at the balance sheet items. What's the first item?
accounts receivable,
Increase or decrease?
accounts receivable is increased.
Is that what they say?
Oh, decrease in accounts receivable,
For how much?
$8,000.
Is that in the balance sheet that they gave us, the comparative balance sheet?
Yes, it's
So
the
that's
change.
exactly where it came from. And as a matter of fact, when you do your homework, I suggest you do this comparative balance sheet extension first. Does anybody know why I suggest that?
It'll prepare you.
Yeah,
Because
mind you, you don't have to. You could say, man, I could do that in my head and scratch stuff on paper. You could knock yourself out. Fine. But I would suggest that you take a little extra time and finish the schedule before you attempt to do your schedule of cash flow statement. So now we have the decrease in accounts receivable. Do we add that or subtract it from net income?
We added.
How do you know?
It says there and it's not in brackets.
Not in brackets. Why do we add it?
Because we added.
Why do we add it? It's a decrease in accounts receivable. Why is that in addition?
Because on the statement of cash flow, we'll add back those items that increase. That
Well, how do we-
decrease.
Well, okay, that's one way of looking at it. But how do you know it's a decrease? Just because they told you?
Because there was a difference between 2014, 2013.
Agree. How is that? So when you say added, you're saying that there's an increase or decrease in cash?
There was a decrease in cash on the balance
There's a
sheet.
decrease. Okay. What about the accounts receivable? Was there an increase or decrease in accounts receivable?
There was an increase in accounts receivable.
An increase in accounts receivable?
Oh, no, sorry. A decrease in accounts receivable. A
And how
decrease.
does that affect cash flow? Let's say you had a business and your accounts receivable decrease. How does that affect cash flow? Is that inflow or outflow?
It's a outflow.
Really?
It reduces the cash flow.
accounts receivable is something we receive as money owed to us.
Oh.
So
I think
when your accounts receivable decrease,
Increases. When the accounts
inflow or
receivable
outflow?
increases, then more money is owed. So or more money is outstanding to you.
But is it a case where accounts receivable is increased here?
no, it was decreased,
By how much?
8,000.
Is that an inflow or outflow of cash for the company?
I guess we could call that an outflow
Why?
because we losing money in a way.
You could say a gain in cash.
Why?
Because when you pay off, when our debtors paid us off, we increase in cash but decrease in another asset, which is accounts receivable.
So when accounts receivable decreases, is that an inflow of money, an outflow of money for the company?
It could be an inflow of money
Why?
Yeah, it might be inflow.
Why?
because you paid down on the receivable.
Who paid
You
down?
would have, the customer would have reduced accounts receivable, and what you lose in accounts receivable, you would have gained in the cash asset. Because the cash went up, receivables went down.
Well, for you
Isn't
guys,
that an inflow?
well, finally we're getting to the inflow side. That's good. After much wrangling. But that's good because whenever a company has accounts receivable that is decreasing, that is always good news for that company. And you really don't appreciate it unless you have a company. Remember, when your accounts receivable hit your books in the first place, it means people owe you money, right?
Mhm.
And as long as you have accounts receivable, do you have any money?
No.
No. Let me give you a personal example. If you have $100 in your wallet and somebody persuades you to borrow it, who has the money now?
Damn.
What do you have?
I owe you.
Yeah, I owe you. Which store can you take that to? Which store can you take the IOU that you have? And say, I'm here to present this accounts receivable as a payment. Will that work? No?
Like the upper.
No. Same thing with companies, doesn't work either. That's why you have to be careful when you have a company that you give credit to. Anybody gets that?
Yes.
Because once you give credit, your money is out there and it'll stay out there until the person who you gave credit to decides to pay you. Sometimes they never pay you. Did you know that?
True.
I have some people who owe me money from 1970 something. They just never paid. They didn't even remember they owe anymore. Even if I approach them and look at me like I lost my
They're
mind.
off.
Yeah.
They don't owe you anymore. That's a write-off.
Even if certainly they have written it off a long time ago, before even 1980. Okay. So whenever you have a decrease in accounts receivable, that is an inflow because people have come to pay off on their bills. That is always good news for a company. Increasing accounts receivable is bad news for a company, especially if they have customers who don't like to pay. So sooner or later, you will not have enough money to pay your own bills if they don't pay you your accounts receivables that they owe. Does everybody get that? Okay. Like my grandma used to say, can't say I ain't tell you. You know. All right, what's the next item? Next item,
Increase in inventory.
inflow or outflow of cash.
Outflow.
What you still like the outflow? Is it an inflow or outflow of cash?
It's outflow
How do you know now?
because we spent money on inventory.
Okay, way to go, Andrika. She took another approach. Everybody was hoping you'd say because it has brackets.
Oh.
But your answer is absolutely correct. Your answer is more important than the brackets in terms of analyzing transactions. What made you think of that?
Because we just went through accounts receivable. I could have sworn that once we have accounts receivable, it's a good thing because people owe us money, and that means,
It
they
is a
can
good
pay us
thing.
back.
It is a good thing as long as what?
They pay you back, but then
No, if
I
they
have
don't pay you back, then the good thing becomes
a bad thing.
it's just like that boyfriend who looked like a nice guy, and then when you get married, he punches your face in. So it would look like a good thing turns out to be a
A bad thing?
full stop, not question.
I just asking a question because I mean it ain't a bad thing for me if he punches my face, and it might be a bad thing for him.
Oh, I get your point. Talk about perspective. Way to go, Andrika. What would you do if that happens?
I call my squad.
What?
I got a squad.
Oh, squad. Okay. Aha. Luckily for Andrika, she has a squad. Other people don't even have the S in squad. They just get beat up, and then some of them eventually even get killed. That's how bad things can go. So yeah, if your accounts receivable, the people are paying, great. But if customers stop paying for a while, especially like during the pandemic, who's gonna pay you?
Nobody, if
No, no. So if you don't have some other source to get by other than who owes you money, company or individual, dog, eat your lunch. All right, way to go, Andrika. It's an outflow because you're buying inventory. So whenever inventory increases, it means you're getting more inventory. In order to get more inventory, you have to spend money. And when you spend money, it's a bracket, outflow. Does everybody get that?
Yeah.
yes,
Okay, next point. Inflow, outflow.
It's the inflow,
Why?
decrease in prepaid expense.
Why is that an inflow?
Because you receive cash for payment in advance.
You receive cash. Now, what is a prepayment again?
Funds received in advance.
No. When you prepay something, you don't receive anything.
Oh, you,
That's a payment, like that's an outflow, like you're paying
Yeah,
out.
prepayment is an outflow, but you're paying in advance, aren't you?
Yeah,
Yeah.
so,
So when your prepayment goes down, it means you're paying what? Less in advance.
oh, you paying, okay. I was thinking something else. I
I
was
know.
thinking of the cash coming in.
Yeah, you're not alone. A lot of people, even in practice, think so.
before we go on, Mr. Wilkinson, how did
Mhm.
we come to the appreciation of 37,000? I know we got it from the income statement.
Yeah.
How was that calculated?
One of your colleagues will tell you. Which chapter is that persons who did the midterm exam?
Yeah, I was looking to the back of the book to see if I could
Oh, no,
find.
no, no, it's not in the back of the book. One of your
I mean,
colleagues will tell you.
okay,
Just what they'll tell you. One of you guys who did the midterm exam, she says, where did the 37,000 depreciation come from? How do we
that's
get
from
that?
the chapter of long-term assets.
Yeah, go to the chapter on long-term assets. Which one is that?
Possibly chapter 10.
Possibly 10, somebody said.
Yeah.
Could it really be 10? Savannah, if you go to chapter 10, is that long-term?
yeah, started to read, with the depreciation, that's.
Yeah, that's where you'll see it.
Are-
Once you finish reading the chapter on depreciation,
Yeah,
chapter 10 will show you how we calculate depreciation.
how you calculate it, that's what I trying to.
Yeah. All right,
Yeah.
definitely. And if
Okay.
in your review you're still stuck on something, you know what to do. All
Okay.
right. So the decrease in prepaid expenses is a inflow because you're paying less in prepayments, so that's money coming in because that's money you don't have to pay out. Remember, anytime you don't have to pay money out, that's money coming in. Is that true or false?
True. Is it?
Anytime you don't have to pay money out, it represents money coming in. For example, if you owe somebody $300 and you don't pay them, who has the money?
I have the money.
Is that an inflow or outflow for you?
I may have the money.
No, no, not the May thing. You have it. Doesn't matter if you spent it. You still have it and you still owe it. But you didn't pay it. So you have it and you have the use of it. Correct?
Correct.
So whenever you don't pay out money that you owe, that's an inflow for you. Because if you had paid it out, would it be an inflow for you?
No, the outflow.
Yeah, that's why people don't pay bills because they want to keep the money, especially if
Like
they owe other
outflow.
people.
No
Like
one
mine,
like,
that's my friend, and she rich. I ain't gotta pay her right. See what I mean? So they keep your money that they owe you because they think you don't need it for some reason, or they need it more than you, even though they promised to pay you 3 months ago.
That's wild.
So as long as they don't pay you, it's an inflow for them and an outflow for you because you haven't gotten it back. And it will not be an inflow for you until they do what? Yeah, somebody said it quietly, pay you? Absolutely. I'm just connecting the dots for you to show you that this accounting thing is not just textbook mumbo jumbo designed to make you miserable in accounting class. It has really real life implications for every single soul who cares to be bothered. And one of the reasons why a lot of people get all tied up because they don't have information like this. Not the complex side of it, just the simple basic side. All right, any other items to reconcile?
Increase in accounts payable.
All right,
So if you increase in accounts payable. you'll
increase in accounts payable. Okay, but how much is that?
7,000.
7,000. Everybody knows where these numbers are coming from, correct?
From the balance sheet.
The income
Okay.
statement.
None of these are coming from the income statement. We already dealt with the income statement items earlier. That's why I encourage you to make sure you read the headings and the statement of cash flows, so you know which statements you're dealing with and what falls under those statements. Mhm. So you don't get caught with the can't see for looking. Like, oh, God, it's right there. All right, $7,000 represents an increase in accounts payable. Is that an inflow or outflow?
That's also
Outflow is in brackets. Is that 7,000 in brackets?
no
So what is that?
inflow.
Inflow. Why?
Because we borrowed more money, so now we get more cash to spend.
Well, yeah, you may have borrowed more money, or you just didn't do what? Pay
Pay
your
it.
bills. You may have borrowed money and created a payable, or you may not have just what? Pay your bills. If you owe somebody $7,000, you don't pay them. Is that an inflow or outflow for you?
Inflow.
Yeah. So if your payables increased by $7,000, that means you got credit, or you borrowed $7,000 more. So that's an inflow for you. So we have to add it to net income. Suppose your accounts payable had decreased. Would that be an inflow or outflow?
That'll be
Outflow.
inflow.
Why?
Because that means we're reducing our debt by probably paying it.
By definitely paying it. There's no way to reduce a payable without paying it. Because nobody's going to accept a promise to pay and then reduce the payable. They will only reduce it once you pay real money. Okay? All right. Any more adjustments?
Increase in accrued liability.
Sorry?
Increase in accrued liability.
Increase in accrued liabilities. Anybody remembers what an accrued liability is? From the bonds chapter? Accrued interest? Payable? Accrued liabilities? What is a liability?
Standing payment. Standing debt.
An amount that you owe, yes. So what is an accrued liability? What does accrued mean?
Over time.
That's an example of it for sure. But what does the word accrued mean? Anybody has a phone? Google? Can somebody Google that for us quickly? Google. No library to go to anymore. Just Google it. Accrual, what does that mean? Accrual? Google?
Anyone got it?
Sorry? Yep. Anybody got it? Accrual? Google? What does it mean?
Okay. So Google says that that's the accumulation or increase of something over time. especially payments or benefits.
Thank you. An accumulation or increase over time. So accrued liabilities means stuff that you owe is increasing over time. That's what that means. So it's a payable of some kind. So in this example, is it an increase or decrease in accrued liabilities?
It's an increase.
It's an increase?
Yeah.
By how much?
3,000.
$3,000. Do we add that to net income or subtract it?
Got it.
Let me ask the question another way. The 3,000, is it an inflow of cash or an outflow? That's really the better way to ask it for a cash flow statement. Sorry?
Yes, that's the confusing way.
But it's the better way.
Yes, a better way.
It is. Otherwise, it becomes confusing, even more confusing later. So does the 3,000 represent an inflow or outflow of cash? Well, first of all, there are no brackets. So what does that mean?
We know it's an inflow.
An inflow. I'm trying to figure out why.
Yeah.
Well, why is the one before? Remember, a liability is a payable, isn't it?
Right,
So if you have an increase in payable, that means you haven't paid, correct?
right. So
If you haven't paid, who's that an inflow for? You or the person you haven't paid?
inflow
Us.
means
Yeah, for us. So an accrued liability increases an inflow because you help people money. How's that? Does putting it that way help?
Yeah.
Okay.
yeah.
I
My
saw.
mind's still stuck on money exchange.
No, I know, but money
My
doesn't.
mind keep getting stuck there.
Yeah, because that's the Bahamian mind. Because we figure if money is happening at the time, it doesn't happen.
No money.
In fact, we're so bad sometimes. If people don't keep following us, we forget we owe. And then so we start arguing with people about the fact that we don't owe.
Oh, wait, but you don't give me no money.
Exactly. That's why you have to give receipts and help people sign stuff. Because if you don't do that, at some point, some people have the audacity to even deny the debt. They'll argue with you and start a fight even, depending on who it is. And if it's a family member, they stop speaking to you and don't invite you to the turkey dinner or something
The turkey.
in November or Christmas. Because you keep asking them about money they owe you. See? Some family members don't like you to remind them about money they owe you. They start turning around and calling you names like, why you keep asking me for that stinking money? And as your family, why don't just let it go? Is that the appropriate thing for them to say?
No, but that's
No.
why you lend money to everybody. As a matter of fact, you need 2 people cap you lend money to, and that's only for emergencies. Because you could sever relationships and friendships like that. Because people don't respect you and how you work hard for your funds.
I'm glad you realize that,
They
Andrika.
figure they're entitled to it. You got, I got. That's the biggest
Especially family members. Some family members are so
entitlement.
bad that you keep bothering. They tell you when you're dead, they ain't coming to your funeral, and if you get sick, they're not coming to visit you. They use all kind of blackmailing techniques not to pay you. Is that the correct thing to do?
Ain't like you ain't have it.
Over your money.
Most of the times they have it. They had it a long time. They just don't want to pay you.
That's why I don't lend money out no more like that.
Good girl.
Yeah, listen to
Only,
Cheryl.
only lend what you can give.
Listen to Cheryl. Only land what you can give. If you don't need it anymore. And
Right.
if they pay you back, say hallelujah. You treat it as an inflow whenever it comes. All right. So Cheryl, that goes back to answering your question. Yes, you're thinking that way because that's how we think. Because there's no exchange at the moment, doesn't like how come if there's no exchange? Well, the exchange is you haven't paid yet. You still owe cash.
I need to
So-
reprogram my mind.
Yes, reprogram. Beginning in 5, 4, 3, 2, 1. Now. All right. As long as you owe people money, that is an inflow for you and an outflow for them until you pay them. If you owe them for 7 years, it's still an inflow for you, even though you spend their money over and over and over. Because every time you don't pay them every payday, you keep spending their money. True or false?
Oh, true,
True.
true.
Dusty? Okay. Any other adjustments?
Yes, decrease in income tax payable.
Inflow or outflow?
It's the outflow.
Sorry, don't answer that. Inflow of cash or outflow of cash? Now you can answer.
That's an outflow of cash
How do you know?
because we gotta pay our taxes and the money gone.
Yeah.
Yeah,
And Andrika is finally thinking about it in very practical, real terms. And if you do just about most of your items in the cash flow statement with that mindset, you will
Yeah.
get most of them correct without stress.
Mhm.
You only go to the bracket, non-bracket thing when all else fails. But it's better if you understand it from the way she has mentioned in the last 2 or 3 sessions. Okay, folks? Forget the bracket for a moment and say, wait a minute, I have to pay, my tax bill has gone down. I mean, the only way it could go down is I pay
Yeah.
the government, yes. Simple as that. And that's how you look at it. All right, so that's your, well, we're not done. Those are the reconciliations. What is the net effect of the reconciliations?
$30,000.
The net effect of the reconciliation items.
14,000.
14,000. How did we get
Oh,
that? How did we get it?
That's,
the total inflows and outflows, summing the inflows and outflows will give you the 14,000.
Well, can somebody work it out and see if what Cheryl is saying is true? Like you need a calculator?
Yeah, the sum of the inflows.
Let's see if everybody comes up with the same thing or not. Or let's see if the textbook is right. They might be wrong, could be a typo.
Okay, so when we take 8,000 less 34 plus 4 plus
Where
7,
where do you see 34?
that's increase in inventory.
Okay, just checking.
I guess I'm wrong. 8 less 34 plus 4
Yeah.
plus 7 plus 3 less 2.
I summed
Something
it.
is off.
No, I summed it. It's 14.
So Andrika, what are you not doing?
Did you start at 37,000?
37 minus the 12 plus 3 plus 8 minus the 34 plus 4 plus 7 plus
Yeah,
3.
start at the top with the very first one. Okay, let's do it again, Andrika. Let's see what happens. Cheryl says she got it, 14. I'm assuming Natasha and Davina.
I got it, but I first started at 16 and then ended up with the 30,000 instead of the 14,000.
No, for the net effect of the reconciliations, you start with the beginning adjusting item, which is 37.
Okay.
Okay, glad you mentioned it because students do that all the time.
Yeah.
Okay, be careful with that. A moment of silence before we go on. Jerry, are you there? Calling Jerry, testing. Jerry, are you there?
Hello, can you hear me?
Can you hear me?
Yes, I can.
Okay, just checking.
I'm here.
No, man, I'm just being the devil's advocate. I know exactly what the hell's going on and all the blah, blah, blah. I'm just teasing when I say you there because I know, All right, so that's good stuff. All right, so the net adjustments is 14,000. And so what does the 30,000 represent? How is that described? What do we call that? What's that long expression for that $30,000?
and net cash flows from operating activities. So
Yeah,
you just add the 16,000 and the 14,000.
absolutely. So we make the adjustments in the middle, We come up with the 14 net effect and we add that to the net income. So even though the company's net income was 16, how much money did the company have at the end of that period? Cash.
30,000.
You follow, folks?
Yeah.
All right. So whether you realize it or not at this stage, whatever you see in net income in any company does not mean that that's the amount of cash they had as at that day. They could have easily had more cash as at that day or less. Do you follow? And the
Yeah.
only way you would know how much cash it was if you do this statement of cash flows. There's no other way to know. Okay? Which is why even some companies don't like to do this. And sometimes when there's hanky panky, they hide stuff in one of the 3 categories so you don't see where the money went. We even have issues in the Bahamas. We're still asking where the VAT money. Anybody know at the end of that question statement? Where did the VAT money?
Mr. Wilkinson, if I can
No.
remember correctly, you told us in financial accounting 1 that central bank posts something annually telling us where the VAT money gone.
So sure, they posted. Indeed. They went into the consolidated fund.
Oh, that's where it's going.
So that's where it should go. Maybe that's where it went. Do we know for sure? Not really. We have to rely on
Sources,
the government, yes.
Hmm.
Does the government always tell the truth?
No.
definitely.
The government never lies.
Well,
Most of the time.
Do bishop and pastors always tell the truth?
Nope.
no.
Oh,
Mm-mm.
and then men of God, so imagine governments. Okay, is that a debit or credit? Like when these irresponsible people in places do not tell the truth, is that a debit or credit? Depends on what
That's
side.
a debit.
Yeah,
That's a
depends on what
debit.
side of the ledger you're on. Indeed. Okay, for sure. All right. So now we see the statement of cash flows. Everything else then is just an explanation for those numbers. And so I'm going to say 1 or 2 things about each of those numbers, but we pretty much already discussed it. And that's why I took the time to go step by step so that anything I say next should not be confusing. And if it is, with a little review on our discussion, you will say, oh. All right, so let's look at the detail for the items real quick now that we have exhausted that statement and the steps, whether it's an inflow and outflow, because that's really the important thing. Being able to come up with an accurate comparative balance sheet with increases, decreases, and then putting the net cash flow reconciling items in the correct spot as an inflow or outflow. How well you do that will determine how correct your statement of cash flows will be and how much points you get from the next week. Okay. All right.
So I take it our statement of cash flow will look like this then. That's just a portion of it. That's just the operating portion.
Yeah, this is just the operating portion.
The darn on me, this says operating.
It's a bunch of crap just for the operating, right? I get your point. The other parts of it are not as complex as the operating. Okay, that's any consolation. This is the most complex part of the statement of cash flows. Okay, so for depreciation, this entry should be no stranger to anybody. Please look at the entry at the bottom, and if you have a problem with it, let me know. Like, I don't understand it. It goes back to what Davina was saying earlier. Where did that depreciation come from? Well, that came from the depreciation expense schedule that we do, and then each year or each month, whatever it is, we have the depreciation expense and we credit. And we credit.
You credit accumulated.
Accumulated depreciation.
What's the narrative for that transaction?
To record annual depreciation on plan asset.
Do you see that, Davina?
Yes.
All right. You see that explanation? When you finish reviewing chapter 10, you'll see that explanation a lot, and you'll know exactly why the 37 is there. This is just an extension to show you again, to record
Yeah.
annual depreciation of the year. Okay?
I was still trying to work out how we get 37,000. I was.
Oh, no, you're not gonna ever get 37,000 and working it out. This is given to you in this case.
Okay,
Okay, does that help? This is given to you.
yeah.
Now, when you get a question on depreciation, you will be asked to calculate depreciation using one of the following methods. What are those 3 methods, class?
Straight line, production, double declining.
Okay, and then you will need to know how to work it out, because you would have already studied it and done the homework and all that. So, but this 37, you'll never see this again. This is just given for this question. Does that
Now,
help?
how did they arrive with the 37 from the income statement?
It's given to you.
So it's not on the actual, like I don't have to do any calculations from the
No.
income statement to
No,
get
you
to.
don't.
Oh,
No.
okay.
Once they give it to you, you just accept it as that.
Oh, okay, that's what I'm trying
I'm
to.
so happy you did that, said it, because some students, they spend a lot of time trying to figure out where did it come from.
Yeah, I was Googling while
Do I have,
was
yeah, like, do I have to
Googling how
calculate?
to
No,
calculate
no, 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 no,
depreciation.
no.
Okay,
It's, see, it's GIDEN. So once it's given, you just use it. You trust me, when it's time to calculate in accounting, you will have no doubt figuring it out, because you will be told, calculate the following.
okay,
You don't
alright.
see that? And it's just given to you, then just use it.
Okay.
Okay? Just like if
Oh.
somebody gives you drug money, do you ask them where it comes from?
But we already know it's drug money. You just said it.
That's my point. Good. Should you take it then?
Definitely.
Not. And you can say definitely.
Studying the blessing from God.
No.
The
Dirty
pastors,
money.
Mr. Wilkinson, the pastors has accepted one bishop. One church I attended a couple years
Yes.
ago, he used to get
Oh.
money from drug boys all the time. He said that was a blessing from God. So what do you
Yeah.
say?
Wait,
about that?
wait, if we have to pay our 10% and the drug boy pays 10%, you wouldn't take it as a pastor?
No, you
Well,
shouldn't.
Well, if you know it's from drugs, you shouldn't take it.
Okay.
Now, if you don't know for sure, not you're just faking it, you really don't know, and they come in and make a thing, then fine. The pastor or the bishop is not responsible. If he does not know,
Well, he knew in this instance, and
Right.
he
then he
said,
shouldn't take it.
well, that's how he got his house over where it is, Old Fort
And-
Bay.
Yes. Remember I told you, not all pastors and bishop are honest.
Mm-hmm.
Many of them are dishonest. They are supreme liars and fraudulent people. Unfortunately, not all of them, just some of them. And in some cases, maybe too many of them in some cases. Unfortunately, because they're supposed to be setting a certain what? Standard. Yes. So the rest of us, even though we may not follow the standard all the time, at least we know what the standard is. And you're seeing people who are supposed to show the standard, living the standard. My. However, sometimes we have a situation, even in church, where they say, don't do what I do, do what I. Cheryl?
Do what I say.
Yeah, do what I tell you to do. All right. So does that clear that up a little for you, Davina?
Yes.
Great. Stop Googling. It's given.
Yeah, I was trying to.
I am so happy you mentioned that.
Depreciation course.
Yeah, you're not the first student who has done that and who thought so. Okay. Good, you mentioned it. All right. Gains and losses. Okay. Let's see. Let's just try Jerry in it. Jerry, are you still there?
I'm here.
Okay. Why don't you go to page 610 under gains and losses and start reading there. Let's see if we can get appreciation for what's happening there a little bit.
Gains and losses. Like depreciation expense, gains and losses that appear on the income statement do not affect cash flows from operating activities and need to be removed from this section of the statement of cash flows. The cash receipts generated by the disposal of the assets that resulted in the gains or losses are included in the investment activities section of the statement of cash flows. Thus, to reconcile net income to cash flows from operating activities and prevent double counting, gains and losses must be removed from net income. For example, on its income statement, Laguna Corporation shows a $12,000 gain on the sale of investments. This amount is subtracted from net income to reconcile net income to net cash flows from operating activities. The result for doing this is that the $12,000 included in the investment activity section of the statement of cash flows as part of the cash from the sale of the investment. Because the gain has already been included in the calculation of net income, the $12,000 gain must be subtracted to prevent double counting.
Okay, sorry, keep going.
Laguna's income statement also shows a $3,000 loss on the sale of plant assets. This loss is already reflected in the sale of plant assets in the investing activity section of the statement of cash flows. Thus, the $3,000 is added to net income to reconcile net income to net cash flows from operating activities.
All right. So for those of you who are still wondering why we subtract 12,000 and add 3,000, there's your explanation. The 12,000 gain is taken out of the net income reconciliation because it's already included in investments at the time of the investment is made. So we take it out of net income so we don't double count in the cash flow statement. It's really that simple. The same thing for the loss. Okay, the loss has already been included in the investment side as a net effect. So we have to add it back to the income statement. And if you just think about it in that perspective, it's hard to get confused. Don't add anything to it. Don't subtract anything from it. Okay. In both cases, the gain or loss have been accounted for on the investment side of the statement. So we have to deduct it from net income if it's a gain and add it in as a cash inflow if it's a loss. Okay. And the reason why we add it in is because since it's already been, the loss has already been identified in the investment side of the statement, we have to add it back so we can show the correct cash position. Because remember, when we took off the loss of 3,000, we reduced the cash position in the net income side. So now we have to add it back, similar to depreciation. So we have the correct cash flow effect. Okay? Students tend to get stuck on those two. Please just do it that way, and you will not be stuck. If it's a gain, subtract it from net income. If it's a loss, add it back. Simple as that. Reason? They've both been adjusted for in the investment side of the statement of cash flows. Period. Okay. All right. Keep going. Changes in current assets. Jerry.
Changes in current assets. Decreases in current assets other than cash have positive effects on cash flows, and increases in current assets have negative effects on cash flows. A decrease in a current asset frees up invested cash, thereby increasing cash flow. An increase in a current asset consumes cash, thereby decreasing cash flow. For example, look at Laguna Corporation's income statement and balance sheets in exhibits 15.2 and 15.2. Note that the net sales in 2010 were $698,000, and the accounts receivable decreased by $8,000. Thus, collections were $8,000 more than sales recorded for the year, and the total cash received from sales was $706,000. The effect on accounts receivable can be illustrated as follows. Let's show the diagram.
All right, yeah, we see those transactions in the accounts receivable account. And anybody who's had a bank account, who's done accounting one, who's looked at a T account at all, should not have a problem understanding what's in that account. We know accounts receivable is the current assets. The normal balance for asset is what? Anybody?
Debit.
Debit. So what is the first transaction that went into this account?
The beginning balance.
Beginning balance at a debit of 55,000 owing. What is the next transaction? Well, what happened on the credit side of accounts receivable?
We collected cash,
We collected cash. Whenever we collect cash, what do we do to accounts receivable?
credit,
We credit it so that we can show the collection of cash and the reduction in accounts receivable. Does everybody see that?
Let me, we on page 611,
Yeah.
but well, how could, we could collect the beginning balance was 55,000 and
Yeah.
collection of cash. Well, the collection of cash was 706.
The collection of cash during the period was not 706.